So let's get more on the earnings season so far and bring in our guests for this morning. We have Ed Rogers, that's right, of Rogers Investment, joining us from our New York studios. And that's where Ed is trying to do some fundraising right now. I hope it's going well for you, Ed. A good evening to you.
Good evening, Susan, or good morning, I guess. How are you doing?
Yes. I'm doing okay, but it's a little early here. But let's talk about the earnings season so far in Tokyo. We're expecting numbers out of Sony. We got numbers out of Nissan and Toyota earlier this week. What do you make of earnings season so far?
Well, you know, as you noted, it's bright and sunny in Tokyo this morning, and I think it's very bright and sunny in earnings season. There are fairly clear skies ahead. We're expecting more good numbers, more positive surprises to the upside. And we're feeling very comfortable with how corporate Japan is looking for the next couple of quarters.
Okay, you sound very optimistic, Ed, but there's a lot of jitters on the markets, obviously coming from, with the concerns over the sovereign debt crisis over in Europe. But what about you? How are you playing the markets, and are you concerned by what's taking place globally right now?
Well, I mean, it's concerning in that, the global macro situation, certainly in Europe, is it's a little bit scary. I think that I like the package that the Europeans are reacting very strongly. I've read reports that Angela Merkel had conversations with President Obama, and his advice was get on this early, throw as much money at it as you can. You really want to stop the slow leak in the rumors and the worries. And I think if they do address problems quickly, that's the best way to do it. What it comes down to is you're going to have to impose austerity measures. Everybody's going to have to tighten their belts in Europe. The reality for Japan, though, is this is not particularly important. Greece, the rise and fall of Greece is not particularly relevant to the Japanese economy. Okay,
well, Ed, let's talk about your performance in Japan, because you're fully invested in Japan, as you mentioned. Your hedge fund is up 7% year to date so far. At this point, with a lot of caution and market jitters, do you have more longs or shorts right now?
We're definitely long biased at the moment. Our net exposures on the long side are creeping up, as are the gross exposures. We think that Japan is incredibly well positioned to benefit from a moderate U.S. recovery and continued spending on the part of Asian, most particularly China. The rising Chinese middle class has got a lot more spending to do. They've got a lot more goods to purchase, and the Japanese are going to be the producers of many of those goods that are getting purchased. One of the reasons we're so excited about the earnings numbers is if you look back to February, March, there are certain sectors in Japan where export-related sectors, exports are up triple digits. We're seeing 100, 150, 175% increase year on year. Those are some very dramatic numbers, and much of it is related to continued selling into China and also the U.S. recovery. So we think that even a major blow up in Europe, Spain, Greece, after Greece, Spain, Portugal, Italy, is probably going to have negligible effect for us in the Japanese hedge fund space.
Okay, so you're going long on Japan. I haven't heard that for a while, Ed. Let me just ask you then, if you're going to go long on Japan, what about the Nikkei? People are looking out for gains this year. You are in particular. How much do you think the Nikkei might gain, or the topics? You pick them.
I think there's still plenty of room for upside, to be perfectly honest. If earnings numbers go the way we think they will over the next couple of quarters, there's no reason why you can't see Nikkei going up another 5–10% this year, easily, in fact. It's much more going to be dependent on a U.S. recovery and the Chinese managing their soft landing in an appropriate way. Those are the things to key off of when you're trying to figure out where the Nikkei and the topics are going.
5 to 10%, that doesn't sound like much, Ed. I guess when you come off a year when you saw 100% gains or 60% gains, I mean, is that satisfying for you and your customers?
Sure. I mean, we think that we can earn somewhere between 15 and 20% net returns this year. And I think another 5 or 10% to the upside that puts them at 10 to 15%, that's going to look really good compared to Europe that might be down 5 to 10%. You have to consider the opportunity costs, and you have to consider the relative returns when you're looking for numbers like that. There are a whole lot of things that will be anchors and drags on performance for Nikkei topics, S&P 500 as well. A sick Europe is not a positive thing for the world, of equities. But we think that Japan is one of the most insulated economies as far as that's concerned. And Japanese hedge funds in particular are...
Yeah. Doing pretty well. Ed, let me ask you, how are you hedging right now? How are you hedging your bets? Are you buying into gold, getting into some more cash at this point, maybe put on some shorts to balance off the longs? You tell me.
We're fully invested in 13, 14 hedge funds, predominantly equities focused. I'd say 75 to 80% of the underlying is equities, another 5 to 10% in futures, some small positions in convertible bonds, some distressed debt, some small foreign exchange, but there's no real significant commodities component whatsoever to the portfolio right now.
Okay, that's really interesting. Ed, let me just quickly touch on the yen with you if we can, Ed, because we're looking at 93 to the US dollar right now for the yen, but really some pinpointed that when the yen dropped to 90 versus the US dollar, that's when you saw that cascade of selling orders take place on Thursday and that 1,000-point drop on the Dow.
Yeah, well, Thursday and Friday were real anomalies in the market, I think. I wouldn't, those are outlier events. I don't know if they're going to be repeated anytime soon. Well, hopefully they're not going to be repeated anytime soon.
Yeah.
I think dollar yen is going to trend towards 95-100, to be perfectly honest. I think it'd be unlikely that we go back down to the mid 80s. I think that'd be surprising to see that at this stage.
Okay. Ed, thanks for sharing your time. Nice seeing you. Enjoy New York.